All righty, here we go. I think we're live. Yes, we are. Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn. Now, today I shared with our investors on Patreon our top 10 momentum stocks for this week, and there was a number of stocks on the list from the energy sector. There was also a few from the healthcare and consumer staples sector. Retail actually rocked it with the retail sales report today. Then I sent a note to our investors with an update on today's Fedspeak. Fed Chair Powell suggested the Fed will need to be more aggressive with rate hikes if inflation does not come down in a clear and convincing way. That's why the market took a fall this afternoon before finally rebounding and nearly closing at highs for the day. Now, it doesn't seem like the market is convinced yet that inflation will, or while perhaps we may be close to a peak on inflation, the market is going to, I don't think, give up that anytime soon. I don't think the market is going to give up the fact that inflation is high and inflation is going to remain high and for a while. That's what I think the market is thinking. And if this is the type of information that you would find valuable along your investor journey, then click the first link in the description. We'd love to see you there. Now, the S&P 500, let me just make sure the comments are up. I don't want to miss your comments because those are the most important thing of this live stream. Yes, they are. We had a fun time yesterday going into the comment. So right quick take of the market, then answer your questions. And I'll let you know when we're about to that end point to start getting those questions ready. Now, and there's no reason you can't ask a question along the way. Totally open for it. Okay, now the S&P 500, it rose 2% today on Tuesday as the market was supported by a contrarian mindset that seemed to be, I don't know, on a hiatus from growth concerns. The Nasdaq gained 2.8%, but the Russell 2000 was the outperformer with an increase of 3.2%, while the Dow Jones rose 1.3%. 10 of the 11 S&P 500 sectors closed higher by at least 1%, including 5 sectors that gained over 2%. The information technology sector was one of those, up 2.9%, and it claimed the top spot for the day. While the consumer staples sector, it was down 1.2%, and it was the lonely holdout amid an 11% drop in Walmart. Walmart posted their earnings this morning. Quick note. You can follow along at home. There is a link in the description of this video to TradingView. And you can sign up by clicking that link for a free account. Doesn't cost a penny. And you can chart right along with us at home by doing this. I'll leave the ticker symbol whenever we look at a new chart. I'll always let you know what we're looking at. So let's pull up Walmart's chart. Excuse me. Ticker symbol is WMT for Walmart. And they fell hard today. Their costs are compressing the margins over at Walmart, and it's not shaping up too nice for them right now. That inflation is hurting Walmart nearly as bad as it's hurting the consumer. Not as bad, but almost as bad. Okay, so here's Walmart today. Here's their earnings. We have $1.30 reported for EPS. That missed by 12%. Now, they were in line, maybe up a little bit on revenue. They reported $141.5 billion right here on the screen. You can see it. And that was up by, in this green number here, $2.734 billion or 11.97%, right? So that's Walmart earnings. They also gave a not so bright forecast, and they had to lower some of their expectations for the rest of this year. Even though the retail sales report came in looking good, remember, that sales report is looking in the rearview mirror. What has it been like at retail stores? Not what are we expecting it to be like in the future? So Walmart is giving us that glimpse of what to look for in the future. So yeah, they dropped 11.39% officially on the day, and they're up 0.29% in the after hours. Now, Walmart has been moving sideways for several quarters now, since after its big run up after the March 2020 lows. And you can see that here for the past several earnings. I mean, it's just moving sideways. And then we do get this run up, and it peaked in April of 22, just last month. And then it's been selling off leading up to its earnings report. And of course, there's been a lot of other selling going on as well. It's been rough, but Walmart's kind of held up pretty well. But if we go look at how Walmart is doing year to date, they are down 9.2%. That is better than the S&P 500 as a whole, and it is better than the Dow Jones as a whole. But Walmart here, 9.2% down year to date. And just think, if they didn't drop this 11.3% today, Walmart would have been in the positive. So at yesterday's close for Walmart was in the positive year to date. Now, how many stocks can you say that that are in the positive year to date? It's not many, like a handful, really. Walmart was one of them until this disappointing earnings results and guidance. Costs are just pressuring Walmart. Inflation is bad. Now, the contrarian mindset today was rooted in a Bank of America Global Fund Manager survey that showed cash levels are at their highest position, 6.1% since September of 2011. Yeah, that's a long time. And the largest underweight position in equities since May of 2020. So there's no sugarcoating this or trying to spin it in any way or putting a narrative on this. The market is oversold. And that's what has really led to today's kickoff. All right, let me open this up. One more thing real quick here. This is the S&P 500 on the chart. I use the ticker symbol SPX to look at that. Volume today picked up just a little bit, but volume today and yesterday are down below the average of all last week. And as a matter of fact, if I were to put a line across here, we would have to go back to this patch, the middle to end of March, to find volume this low. So people are being very cautious right now. And that's why that survey of fund managers showed a large percent of cash on the sidelines just waiting to be deployed. So when we do get a rally, right, and this cash comes from the sidelines rushing into the market, it's going to send this market up and quick. So we have to watch for those signs and try to understand when that's occurring so we can jump into it. A quick note for Patreon members. The note that I sent out this morning, was that useful? Did you find it valuable? Could you, was it something that you were able to use throughout the day? Let me know in the comments, yes, no, on the pre-market insight. Just let me know if that was useful or not. If it is, I'll see if we can't put that into our routine to do it every morning. If it's not useful, then just tell me it's not useful. You can either leave it here in the live chat on this video, or I'll post a question over on Patreon later this evening about it, and you can answer it there if you would prefer. So a question, I'm just wondering if that was helpful or not. Okay, I'm going to take volume away here right quick, and I'm going to open this up so we can see today in the S&P 500, and each candle represents one day. So you can see, starting on April 12th, we had a green day on the S&P 500. Then on April 13th, we had a real boost, right, in the market. But then this Monday, yesterday, We were flat. We really didn't go anywhere. We were looking for a follow through, but it wasn't there. And then today with retail sales, that just helped to send more money into the market. Now, growth concerns were alleviated by the following developments today. Home Depot, ticker symbol HD. Let that chart load. Home Depot reported better than expected earnings results. So here's Home Depot. Again, the daily chart for Home Depot. You can see over the past quarter, Home Depot has in a slight downtrend, It's been making lower lows. And its real low was on May the 12th. What was that? That would be $280 a share. And it's now at $300 a share. So that would have been a nice pickup there. But yeah, pandemic ran up, traded sideways, ran up even more. And then since its peak here on January the 3rd of 2022, the very first trading day of this year, it has been declining. Year to date, Home Depot is down 27.4%. That's nearly as bad as tech companies, right? But Home Depot reported better than expected earnings report, $4.09 EPS. That beat by 11%, and they brought in $38.9 billion, and that beat by $2.2 billion or 6%. So Home Depot came in wonderful with their earnings report, better than expected earnings and better than expected guidance as well. So we're thinking, Home Depot, why is the guidance so good for Home Depot when we also have a theory that the housing market is going to come down, is going to slow down, is going to contract through the remainder of this year? We're already seeing signs of that now. Houses are staying on the market longer. Houses that are on the market are seeing price reductions, except for new homes. New homes are seeing prices increase, but used homes. So we're already seeing a contraction. We don't have nearly the amount of homes for sale as we have had in past years. So inventory is super low. If the housing market is slowing down, you would suspect Home Depot, Lowe's would also slow down because people wouldn't have the money to spend on their homes. But right now, Home Depot is just not seeing that slowdown. And we kind of talked about or theorized in yesterday's live stream about what are consumers going to do? Consumers want to get out of their house for spring, summer vacations. But airlines, ticket prices are high. Gas prices are high. So they're probably going to stay local, right? Take, a road trip that maybe is an hour or two away from their home, regionalized theme parks. That's a potential. So, but Home Depot is not quite seeing that just yet. But then we also got United Airlines. Ticker symbol is UAL. And we talked about them briefly yesterday, but they were up 7.8% today after they increased their Q2 unit revenue outlook. So basically, any and all companies can do this. If they are in the midst of a quarter, right? Maybe they're 2 months into a quarter, or maybe they're only 1 month into a quarter, and they have a higher percentage of sales than they expected, then they can update their guidance and they can make that publicly available. They can update their guidance to show that, well, we were guiding for a 10% quarter over quarter increase in sales. Well, we've already reached that 10% mark. So now we're going to project that we're going to hit 15%. So companies can and do update their guidance throughout the year, not just on earnings day. So it's important to pay attention to those too when they come out. Sometimes they can increase, sales or increase their expectations for EPS or revenue. Sometimes they can even lower them. That's possible also. So American Airlines is seeing more sales, more unit revenue is how they call it. And they use the word lookout, which is interchangeable for guidance. So people are flying, at least right now, during this quarter. We don't know how it's going to be as it continues to go, but we will follow this and keep it updated. But this is another reason why investors jumped into the market today. Also, total retail sales for April rose 0.9%, just as expected. And we'll talk about that a little bit more in detail when we talk about the economic data points that we got today. Also, retail sales, excluding automobiles, rose 0.6%. And industrial production for April jumped to 1.1%. Now, in addition to these, we put them in a growth category, right? They're little citations that, hey, even though we think, we theorize, our hypothesis is the market is slowing down and shrinking, the economy. But we have these couple of little pieces of information that show the opposite of that. That growth is continuing. And that's what we're going through right now. In addition to that, Shanghai reported no new COVID cases for 3 straight days outside of their quarantine zones, further supporting its reopening initiative. Now, on a related note, Hong Kong plans to relax coronavirus restrictions later this week, while Japan plans to allow small groups of tourists to enter the country this month. That's an improvement in Asia. That will help with supply chains and growth. Now, an improved growth perspective helped tame inflation concerns, which were highlighted by Walmart and Fed Chair Powell at the Wall Street Journal virtual event. Home Depot also mentioned inflation pressures, which contributed to an 8.2% year-over-year decline in customer transactions in the quarter. So, what can we deduce from this? Well, consumers are still out purchasing. The dollar amount that they're purchasing is growing a bit, but the amount of transactions customers are making are fewer. That helps to support that the economy is contracting. And that 8.2% year-over-year number is awfully close to the 8.5% last quarter for inflation and slightly above 8% this past month for inflation. So that's interesting. And that was from Home Depot and their being at this virtual event today. And that all happened in the first quarter for Home Depot. Now, Mr. Powell said the Fed will be more aggressive with rate hikes if inflation does not come down in a clear way. But he did preface with the comment, with a comment that an observation that the Fed can be less aggressive if inflation does clearly come down. This was largely consistent with his prior views on monetary policy. Like I mentioned at the beginning of this live stream, this Fedspeak information was sent out to our investors on Patreon earlier today. Now, the Treasury market was definitely in sync with rate hikes and inflation expectations today, as well as within a general upbeat mood on Wall Street. The 2-year, and we can look at that, US 02Y, the 2-year rose 9 basis points to 2.67%. Now, in the after hours, it's up a little bit more than that to 2.71%. So it's continuing its climb higher right now. And remember, the 2-year is more sensitive to interest rates and the Fed funds rates, and the 10-year is more into economic growth and inflation. So, the 10-year, let's talk about that one today. US 10Y to get to the 10-year. It rose 9 basis points as well to 2.97%. It's fractionally higher right now, almost at that 3% mark on the chart there. Excuse me. All right. Continuing to move on. WTI crude, and you can look at that. Type in WTI crude. You can type in oil too. It'll be your top one here. WTI crude oil. On the right side, it will say TVC. Perfectly fine to tap on. And the ticker is USOIL for US oil. $113.90 a barrel right now. Moving around like Bitcoin. Oil today fell 1.4%. And it closed at $112 a barrel. You can see now oil is rising. It's back up to nearly $114 a barrel as we speak. One thing that's interesting, if we look at the chart here for oil is getting to a point where it finds resistance. As a matter of fact, I could probably put a line right here that's right about $114 and what do I have it on? $114.25. That looks like a resistance area for oil right now. You can see it got rejected, and let me do this. I'll circle it. It's been rejected here, right? It's also been rejected right back here, and this was the middle to end of March right here. And then, of course, the war kicked off. I mean, we can totally see where it spiked. It got all the way up to $129 a barrel before coming back down. And there's still people out there calling for oil $130 a barrel in our near future. So it'll be interesting to watch oil to see if it does break through this resistance area that it seems to be setting up. And it does seem to also have support right around $95 a barrel. And it looks like there might even be a bit of a new trend line forming here for oil. Let me remove that out of the way to make it a little clearer. Now, there was a trend line for oil going back to its breakout in the middle to end of December of 21. It was in a perfect channel. Let me bring this back down because it's no longer in that channel. Okay. So now it looks like it's possible it could be starting a new channel. So let me clone this and just see if it can match up here. Now remember, when you are charting, you need 3 points of contact or more to make a trend line stick. And if I do it right there, we have 1, 2, 3, 4, 5, 6, 7, 8. We've got 8 points along the top, and we've got our 4 points along the bottom. So it looks like we're getting in a bit of a trend line, a trading channel here for oil. And I do find it interesting that this top line, this top trend line, is matching up with this resistance price point for oil. So is oil going to just float around here and just hold in this area? Or, you know, $112, $114 a barrel? Or is it going to get rejected off this line and start, you know, coming back down before, you know, coming back up? Oil's in an interesting spot right now, so let's keep an eye on this one. It's at resistance right now, so let's keep an eye on that. Okay, moving on to the economic data that we saw today. The big one, the retail sales report. It was awesome. Total retail sales increased 0.9% month over month in April, following an upwardly revised 1.4% increase in March. Now, in March, it was reported that the increase was only 0.5%, but they revised that to 1.4%. That's a big jump. And then the 0.9% that we got today for April. So retail sales were very strong. Now, excluding automobiles, retail sales rose 0.6%. We said this already. After increasing and upwardly revised again to 2.1% in March. And that was revised up an entire percentage point. We reported back in March that it was, or back in April for March, that it was 1.1%. Now it's been revised up a whole percentage point to 2.1%. The key takeaway here, which is not adjusted for inflation, do remember that, is that higher pricing helped in the sales growth. Yet spending increased across most discretionary categories. Okay? Think about that for just a moment. Okay? The main takeaway for the retail sales report, it was a good retail sales report. But the key takeaway to the report, which is not adjusted for inflation, is that higher pricing helped in the sales growth. Yet spending increased across most discretionary categories. So what is that telling us? That's telling us, just like what airline companies saw, just like what Home Depot saw, sales are increasing. But sales are not necessarily increasing because consumers are out buying more things. Sales are increasing because prices have gone up too. So consumers are out buying about the same amount of stuff. It just costs more. We also got the total industrial production, and it increased 1.1% month over month in April, making for the fourth consecutive month of gains of 0.8% or greater. The capacity utilization, I don't know why I get tongue-tied on that one, huh? Try saying that 5 times. But the capacity utilization rate increased to 79%. And that's up from March. March, it was only 78.2%. So the logical conclusion here is that it shows ongoing strength in industrial production and exposed the potential for further strength as motor vehicle production is expected to improve with any improvement in supply chains, particularly for semiconductors. Okay, I'm following with that. We also got the NAHB Housing Market Index for May. It decreased, not a surprise, to 69 from 77 in April. Okay, we know the housing market is slowing down, right? Housing prices will most likely drop as we move through this year and get closer to the end of this year. We also got business inventories, right? This will show us two things. Are businesses ordering more to keep up with demand, or are supply chains smoothing out? And that's why business inventories are up, and they are up. They increased 2% month over month in March, following a 1.8% increase in February. So that's showing me that maybe the supply chain is starting to show some signs of wiggle room, of easing, which would be a good thing. Now, looking ahead, investors will receive housing starts and building permits for April, and of course, the weekly MBA mortgage application index tomorrow. Also, investors on Patreon, you guys are in for a treat. Our top 10 value and our top 10 growth stocks will be uploaded later on this evening. So be on the lookout for those 20 high quality names in those two different sections, growth and value. All right, get ready for your questions because I'm about ready to wrap this one up. Here's where we stand year to date. The Dow Jones is down 10.1%, nearly out of correction territory. As soon as it breaks that 10%, 9.9%, it's out of correction territory. The S&P 500 is down 14.2% year to date. The Russell 2000 is down 18% year to date. It is now out of, quote, bear market territory. But the Nasdaq is still in bear market territory, down 23.4% year to date. Now, if you learned something new today or you enjoyed this, then do me a favor and click the like button. Share this video wherever you can. That really helps out the channel, and it's something free that you can do. And be sure to subscribe so you never miss another video to help you along your investing journey. And if you found value in this, and this is something that you would like more value from other areas in the market, then you'll definitely find value by joining me and our other investors over on Patreon. Join us by clicking the first link in the description. All right. I'll give you a few moments to get your questions up, and then we'll wrap this live stream up. Do answer the question in the comments. Would you like a earnings breakdown on Walmart, Home Depot, or Take-Two? Let me know. Okay, it did help. You helped me. Let's see here. It did help. You helped me get up 11% on my oh, awesome. Awesome. Great job. Great job. I am proud of you. Absolutely. Great job. Great job. I am so glad to hear that. All right. Well, maybe we'll try to work that in and push that out every morning. Because if it's beneficial and if it's helpful and it's valuable and it can help you throughout the day, then that is definitely something that I want to do. Whatever I can do to provide value for you, to help you along your investing journey, that's exactly what I want to do. Awesome. Do you think if China lifts all lockdowns, they will end the? Not exactly. China is just one factor, right? And we've got a whole list of different factors that are causing this bearish market. Okay, if I come over here, SPX, let me go back to the S&P 500 for just a moment. Right now, the market is just so totally oversold, and people are just so, I want to see green. With the market being so oversold like this, and we see a few positive signs for growth ahead, then that's a door to jump back in, to make a trade. But I don't necessarily think we're out of the woods just yet. If China were to end all restrictions, that one factor, yes, would play into, okay, growth could be happening, because once China is open, and once the rest of Asia, I'll just put it that, once Asia has opened back up, then we have trade that's happening. Supply chains should get better. You know, Tesla Shanghai should be fully opened, no restrictions whatsoever, selling vehicles. So that helps individual companies as well. Supply chain's the big one, because a lot of stuff, individual parts, raw materials and such, come from Asia. So it's one factor to look at for growth. It's kind of like on last Friday's live stream when I talked about the 4 keys to watch for a follow through on Monday. The big cap stocks were one of them, and they failed to lift off. Well, they lift off. They totally lifted off today. So if China were to open up and the rest of Asia were to open up, it would be a check mark on 5 or 6 different boxes that need to be checked. It would help to provide growth to the market. But remember, rate hikes and inflation are the 2 biggest characters or factors holding this market back right now. I guess a third one I could add to that would be growth concerns, because there has been plenty of growth concerns in the market. There's been plenty of fear about interest rates, and there's been plenty of fear about rate hikes, and that's what caused this big fall right here all throughout the month of May so far, you know, except for the past few sessions. So yes, China opening up, Asia getting rid of COVID restrictions, that would be a bonus. That would be one factor of 5 different factors checked off for growth. But I do think we're shrinking right now, and I do believe we are most likely in a recession right now. We just don't know it quite yet. Let's see here. And the stock a bit. Webull account shows the stock as delisted. Can't sell today. Is it temporary delisted? Maybe. I had a problem with Webull today too. This is interesting. When I was in Webull earlier today, I was trying to make a purchase. What was it? Oh yeah, the Direction FinTech. So let me just get my my phone here, and Let's see. So I made a couple of trades in Webull today. One was on cloud computing, and one was on fintech. And I could not get the fintech to go through, and it kept showing. I'm trying to go back to it right now to see if it still says that or not. Let's see here. No, it looks clear again. So when you were in Webull, were all the functions working properly? Like for me earlier this morning when I was trying to use Webull, the chart function was not working. The time and sales tab wasn't working. Order flow, distribution, everything just basically said zero, or I can't remember what phrase it used. But that's interesting that you too had an issue today in Webull. So I wonder if that is a Webull glitch. Let's just let me see over here. That was a nice gain for them today, up 10.6%. Yeah, see, when I went following you, Devin, when I went in on my Robinhood account earlier today, when Webull was acting up, Robinhood showed it just fine. I mean, it looks like I don't see anything on I mean, it looks like the merger is fine and everything is okay. Interesting. Let me just check one more place here. Oh, I think AMD is a good company. Remember the buy box that we had for AMD? Just get that loading on the screen while I'm over here. I mean, AMD is just barely outside of that buy box right now. Anything under 100 is I think is good, and it's at 102.71 right now. So just because it's out of that buy box, it doesn't mean you missed an opportunity. It could definitely come back down back into that buy box. We get some sort of bad news, and away it goes. It'll come back down. All right, I mean, it looks okay. My note that I have here for Aspen Tech, it says completes previous announced transaction with Emerson. As part of the close of the transaction, Emerson will contribute $6 billion in cash to Aspen Tech. And they get 55% stake of Aspen Tech for that $6 billion. That will help Aspen to penetrate new and existing markets. So, I mean, it doesn't look like there's anything shady or going on. I think it was just Weeble. Oh yeah. You can definitely go down a rabbit hole researching these things. No worries. I'll probably be normal tomorrow. No mention on IR page. Okay. Let's see here. Had a question about AMD. So yeah, looking at AMD here, it's out of the buy box that we had set up. Anything under 100 is a good deal, I think, for AMD. Sub 95, that is really within the buy zone. And you can see it was in there before and after earnings. Now that it has really accelerated, I mean, it had a 9.2% day, 8.7% day today. It is really doing good and rebounding nicely. Now, one thing that I like here is that it did get above its 50-day moving average, but if you're using technical analysis on this stock, look at this. Where it's at right now, where it closed, this 102.71 right here. If we come over here, and we can see this support area here, right? That's right around the same price point. Another right here where the wick came down and tagged it. And again, with these two right here. So this area at the beginning of March to the middle of March, that acted as support right where it's at right now. So on stock charts all the time, old support can become new resistance. Old resistance can become new support. The line is usually there, whether it's support or resistance, that can change from time to time. So I'm curious then, with where it closed at today, is that line now acting as resistance? So tomorrow obviously will be the key there for AMD. Let me try to line this. I'm going to put another line here right at this point. I got it right at 102.53 was as close as I could get. This red line here, and that you can see it better too, where it acted as support just over my head over here. And then let's go back up any further. So also here, this big 7% drop, that area was support for AMD. And then let's see. And then look at this too. It was pure resistance right here, October of 21, last October, and then again support last August. So that line is a critical line there for AMD. So maybe this is a resistance line. Maybe the bounce that we got today in the market, maybe that's it. Maybe tomorrow we'll have a flat day, or maybe people will sell in the strength and give some of this profit that we got today back, right? And lock in those profits. That's always a possibility. So I do find that curious. So if it can break above 102 and get to 103, it's got a chance to move up a little further. But I don't think we're out of the woods just yet. It is possible this could come back down. make a move like, either tomorrow, it gets rejected, so it comes down tomorrow, have another bounce up, and then maybe we get back in here. I don't know. Maybe it can break through, and then it has another resistance area that would have to break through right here, and maybe it can do it. So 2 options there. I'd give it a coin toss on probability. I do like AMD as a company. I do think AMD is worth it. But my buy box has been there for a while, and it was nice when it was in it, for sure. Okay, let's see what else. Any other questions that you guys have? I'd be happy to dive into. All right. Well, if that's all the questions, we'll wrap it up here for tonight, and we'll be back tomorrow after the market's closed. Talk about what happened in the markets, why it happened, and what to expect for tomorrow, which is actually a pretty good question. I think tomorrow could be a coin flip, whether it's green or not. If we're looking at the chart here, this area, it's getting really close to a point of resistance for the S&P 500. The S&P 500 may be able to muster support to break through it. Let's see what. Oh, I messed that one up. Let's see what we'd have to move in order to break through it. So we're about 0.2 away from a little resistance, but we're really, the tough resistance is about 0.68% away. And it's right here at the bottom of this big yellow box that's in the middle of the screen. And the reason that point is resistance is it acted as support when the market was falling back here at the beginning of May. But this was also, that area is also the second big low of the year on February the 24th. It's right at that point. So if we could have a green day tomorrow where the S&P 500 is up 1% or higher, then I think we've got some legs to stand on. Also, Nasdaq has got to be the driver. If we go look at the chart for Nasdaq, it's got to be the driver. Right now, it has practically no resistance right now. Practically no resistance right now. It could continue to run. What I'd really be watching for on the Nasdaq is once it gets into this area right here, because that's where the 21-day moving average is going to be coming down and then meeting with a price point friction area. And for the Nasdaq, where it's at right now to that area, I mean, it's 2.2% away. So it went up 2.6% today. It has no resistance for the next 2.1% of space. But I do not think we're out of the woods yet. It is possible that, maybe the Nasdaq comes up into this area and that's when, things start to fall for it. Maybe. But I'm still watching for a third low for this year. And on the Nasdaq, it's going to be, remember when this low was hit? That was the January 24th and then the February 24th. I'm looking for it to hit on this line at some point. A third tap on this line, which is going to, which if we go right to the tip of this line, that is May 24th, and it's about 11,200, which is a big fall from where it's climbed to right now. So those are some things I'm watching there. Obviously, the big cap stocks, those are the ones that you want to watch. The Amazon, Apple, Tesla, Alphabet. Those are the ones that you want to keep your eye on for this momentum to continue. And then let me, after I clear that up a little bit, let's go over to the VIX right quick. Remember, go to the CBOE VIX. And you can see it's down even further today, another 5%. It is well under that support line that it had, that it just kind of broke right through yesterday. So now we're kind of looking, well, if this rally continues, then that means the VIX is going to come on down to somewhere maybe 22. Is that what it looks like here on the chart? Maybe somewhere around 22 to 20 points, somewhere between there, for this rally to continue. It's got to get down to this area here, and then that's where we could probably see a reversal, and maybe it shoot up another time for us. But things right now are pointing to green, but we do have to, oh yeah, and remember, like I mentioned on Monday's live stream, this is an option expiration week, and companies that are, or stocks that are typically highly traded in options, like Apple, for example, this is usually the week that they do really well. Out of any given month, this week is usually pretty good for them. Let's see here. We've got it all figured out on green days. Absolutely. And I'll keep a lookout for that pre-market post. Okay. Yep. If that pre-market post did a good job, then, and it helped you out through the day, I will work out a, I'll work that into our routine to get that out pre-market. It's almost like a live stream, but instead of it being, this live stream information, it's in written form. All right, cool. Well, yeah, green days are easy. We got it all. We know it all on green days. Absolutely, for sure. It's those red days. And see, that's one thing that I want to make sure that I'm here for. Whether it's a red day or whether it's a green day, everybody's happy on green days. Everybody feels great on green days. I'm here doing the live stream. People feel awful on those red days, but I still want to be here on those red days too. It doesn't matter to me. As long as I'm providing value, helping, and that's it. We're good to go. So, yeah, we'll wrap it up here. Awesome questions tonight, ladies and gentlemen. I greatly appreciate it. So I'll see you tomorrow after the market's closed, and hopefully we have another green day on our hands tomorrow, and we got it all figured out. All right. Well, you guys take care. I will see you tomorrow, and yeah, that's it. All right. Thank you, ladies and gentlemen. I'll see you in the next video.